Our winning picks last Diwali have handsomely outperformed the benchmarks, and we selected these stocks on the basis of time-defying fundamental investment principles. Amid the noise of tapering by the US that could result in slowdown in global liquidity flows to emerging markets and heightened inflation concerns, augmented by supply disruptions threatening to squeeze profit margin of corporates and prompt faster than expected actions by central banks, we're going back again to our basics to pick up 10 gems for Samvat 2078. Our first pick is Apex Frozen Foods. It's one of the largest exporters of processed shrimps. The financial performance of the Indian aquaculture sector has been sluggish because of COVID, competition and overcapacity. However, recent shrimp export trends suggest that global demand is staging a comeback. FY23 could turn out to be a strong year for Apex due to availability of spare capacity and focus on high-margin, ready-to-cook products. The stock is available at a reasonable valuation as well. The second name on our list is Associated Alcohols and Breweries. It sells proprietary liquor brands and is one of the key contract manufacturers for United Spirits. Its performance has been quite resilient despite COVID-led disruption. The company is planning a capacity expansion to take its capacity from the current 4.5 crore litres per annum to 7.5 crore litres per annum by end of FY22. Its earnings appear to be at an inflection point. It's an underappreciated play within the alcohol industry and is trading at a deep discount to industry peers. Next on our list is BSE, which will be one of the beneficiaries of growth in equity markets, both primary as well as secondary. Despite being a distant number 2 player in equities segment, revenue growth will come from increase in market size. Also, BSE's market share in segments other than equity trading, the likes of commodities, mutual fund platform, INX and even SME listing is respectable. Annuity-like business with high operating leverage, strong cash flow and high dividend payout make BSE a unique proposition. Burger King India also has huge growth potential. It is expanding aggressively, aiming to reach 700 stores over the next 5 years. Planned foray into coffee and beverages would be an additional lever for growth. Recent announcement of franchisee rights in Indonesian market is at attractive valuation and it will create shareholder value in the long run. Next on our list is HCL Technologies. It has not seen the growth sparkle of its peers despite its services business showing strong momentum thanks to decline in products and platforms revenue, which dragged down growth and impacted margins. Now, consequently, the revenue guidance stood unchanged for FY22. However, company's decent talent management along with strong hiring and robust order inflows point to strong outlook ahead. This stock trades at an undemanding valuation, offering a great margin of safety amid the technology upcycle. Next up, HCL has exposure to both the promising end markets of pharma and crop protection chemicals, and it stands to benefit from the China Plus One strategy. Recent opportunities arising from global supply chain disruptions have strengthened the theme, leading to a higher conviction for the CAPEX program and also culminated in a 10-year contract in the emerging vertical of animal health business. Further, we're enthused by the company's focus on research, which can be attested by its presence in the Japanese crop protection market and foray into Japan's pharma value chain. Shakti Pump, next on our list, is a leading player with 40 to 45% market share in solar pumps. It's operating at a 45% capacity utilization at the moment. It expects government tendering for ambitious plan to install 4 lakh solar pumps to start soon. Scope for margin expansion, strong orders in hand and large orders from export markets provide strong earnings visibility. The stock is also reasonably valued. Sona BLW, a rare gem to play the theme of sunrise electric vehicle sector. The company has already attained a leading position in the electric differential assembly market globally, and it continues to aggressively target new products, new customers for multifold growth. With the who's who of OEMs around the world as its clients and a strong order book of 14,000 crores for the next 10 years, of which 57% is for EVs, we see strong growth trajectory ahead, and this is a stock you should definitely watch out. The next stock to keep on your watch list would be Titan, the largest listed jewelry player having superior product design, strong parentage and robust brand, and has huge runway for growth. The company is further strengthening its dominant position by entering new markets and adopting a more localized approach, thereby gaining market share. Hallmarking regulations as well as impact of COVID-19 on unorganized players would immensely benefit bigger and organized players like Titan. In fact, Titan is also aggressively expanding in eyewear and watches, which would aid the overall growth momentum. Strong earnings growth would continue to drive the stock's re-rating. Last but not the least, we have Vesuvius India on our list, which is a direct play on the increasing steel production in India. Nearly 15 to 20 million tons of incremental steel production is likely to come in the next 2 to 3 years, which will lead to incremental demand for refractories. Customers include 3 to 4 large players, which constitute nearly 50% of the industry. Debt-free balance sheet with about 25% of market cap in cash equivalent will support valuations on the downside. So there you have it. Top 10 stocks that we've picked out for you for Samvat 2078. Happy investing and happy Diwali!